The secrets to Warren Buffett's success. With a net worth of around $115 billion in 2022, Warren Buffett currently ranks 8th on the list of the wealthiest persons on the planet. He is the CEO of Berkshire Hathaway, a holding company that owns many big companies such as Geico, Helzberg Diamonds, Duracell, and has minority shareholding in famous companies like American Express, Bank of America, Apple, and the Coca-Cola Company. The incredible success that Warren Buffett achieves calls for finding and learning important lessons from his life. Here are some of the key secrets that were central to Warren Buffett's success and which new investors can emulate to become successful. 1. Dividend investing. Warren Buffett has plenty of high-yield, dividend-paying stocks such as Bank of America, Apple, Wells Fargo, and Coca-Cola. As per some estimates, Warren Buffett gets billions of dollars in dividends each year from his portfolio of stocks. Dividend-paying stocks are stable companies with well-established businesses, and investing in them gives you dividend income as well as potential capital appreciation. You can earn higher overall returns by reinvesting the dividends to purchase additional shares through compounding. 2. Invest for the long term. Warren Buffett advocates investing for the long term. Short-term investment or trying to time the stock market is akin to speculation, which is a high-risk strategy that can wipe your investment. The best way, according to Warren Buffett, is to buy stocks of good business at cheap prices and then hold on to them for the long term, even decades, to become part of the company's journey and derive returns from its success. Most of the stocks Warren Buffett holds have been with him for 2 or 3 decades, and he has been part of the growth of these companies. 3. Accept your mistakes and divest your wrong investments. Warren Buffett does not feel ashamed of admitting his mistake of making a wrong investment decision. For example, Warren Buffett started accumulating IBM stock back in 2011 until 2018, but the company could not get him the returns that he wanted during all those years. He realized his mistake, set aside his emotions, and quickly divested his position instead of clinging on to it to satisfy his ego. Warren Buffett also openly admitted that he missed the opportunity of investing in Google, but since he didn't understand the technology company back then, he let it pass. The key is to not let your emotions control your mind. If a position is not going your way, you should think rationally and divest your position to reduce your losses. 4. Analyze businesses before investing in any stock. Warren Buffett thoroughly analyzes and reads everything about the business in annual reports, 10-Ks, newspapers, magazines, before investing in it. He ensures that the stock is cheap in comparison to the value it provides and does not merely invest in a company whose stock is trending higher. According to Buffett, when you buy a good business, you don't need to check what its stock is doing. For example, if you buy a farm, you don't check every day how much it is selling for. The key is to invest in good businesses and then hold it for the long term to earn rewards from it instead of selling it the next day. 5. Take advantage of market corrections. For Warren Buffett, market corrections provide opportunities for value investors as everything becomes available on discount. Buffett famously said that at Berkshire Hathaway's annual shareholders meeting, you gotta be prepared when you buy a stock to have it go down 50% or more to be comfortable with it, as long as you're comfortable with the holding. According to him, if you have done your homework in selecting a good business, the market corrections and downturns are irrelevant. 6. Don't follow the crowd. Unlike common investors, Warren Buffett does not get excited when the stock market indices record highs. He doesn't follow the crowd and sticks to his value investing technique. When the stock market makes new highs, it means that the valuations on the market are getting expensive, which is not a good bargain for value investors. During the market euphoria, it makes sense to be very wary of the impending danger as reversal could be on the horizon. Warren advocates that investors should buy stocks of those companies whom they understand and stay away from those businesses they don't understand. This investment philosophy will enable investors to refrain from following the herd mentality and think clearly when it comes to making informed investment decisions. Warren Buffett is one of the most celebrated and highly regarded investors of modern times. He often provides valuable tips and pieces of advice in his interviews and speeches, which can greatly help new investors. These tips might seem simple on paper, but still, most investors struggle to apply them. And this is what separates successful investors from ordinary ones.